Hey guys, my name's Harinder. I lead the research team here at Flux, and today I'm going to be talking about the situation we find ourselves in the oil markets, the Strait of Hormuz closure, the US-Iran conflict, and ultimately what we can do about it. You and I, the person at home that's being affected by these prices, previously unable to trade, previously unable to get involved in these markets. We've made a number of key steps, really important steps, to be able to provide liquidity and access to those that were previously unable to sit at the table of trading oil and protecting yourself against oil prices. So what I have on my screen are two absolutely key benchmarks for the crude market. We have the Dubai Middle Eastern benchmark, and of course, the Brent futures benchmark. Brent futures, as we've mentioned multiple times on Flux, is a proxy contract. It's a very good proxy for how the oil market is supplied, the level of demand, but also incorporates many other aspects of macro and fundamental sentiment in the market. The more important benchmark for the Middle East, and certainly to be affected by the Strait of Hormuz closure, will be the Dubai benchmark, which is the price series at the top of my screen here. And of course, with the Strait being approximately 20% of global oil, this closure has meant that the price of Dubai crude has spiked massively, and with strikes on key ports such as Fujairah and across the Gulf, and various vessels to Iraqi ships being targeted in the northern part of the Gulf, with a number of different bases being attacked. Of course, there's a risk premium that gets priced in, and we see these prices rising rapidly, which of course leads to downstream effects on the cost of living, on the prices of gasoline, of diesel. Of course, the jet fuel that comes from the Gulf that goes into Europe, that ultimately is part of the costs that airlines will have to bear and then pass on to the end user. Those people that are traveling, holiday plans that everyone has in summer, of course, the costs will be passed on down to the end user. What can we do about it? What can we actually do if we see these price spikes across products, across crude? But prior to Flux markets, there wasn't an ability to really protect yourself. But now we have developed this platform which allows you to trade both speculatively and also to protect yourself in these key contracts, whether that be in a particular time frame. Perhaps you're traveling in May or June and you'd like to really be secure that the prices of your tickets won't become inordinately expensive, maybe even years ahead. So this is what we've done with Flux Markets. So on my screen here, I have the Middle Eastern crude benchmark for April of 2026. So this is the Dubai benchmark, that Eastern benchmark that is very, very important for Middle Eastern crude supplied and crude traded. So we have that the contract here. We have a bid and an offer price where you can buy or you can sell or you can buy it along with the volume that you're looking to trade. We have this both for individual months, so April, May, June, as the months you can trade if you'd like to express a view in a particular tenor. But also we have perpetual contracts, which are continually rolling contracts, which allow you to maintain exposure over time without having to trade in and out of individual tenors, which is super powerful if you have a view that persists for several months, perhaps, that you think that the US-Iran situation will continue to persist, perhaps the Strait you believe to be closed for a long period of time. The perpetual contract allows you to maintain a view over a longer period of time without having to exit your position. That's, of course, only one of the contracts, of the number of different contracts we offer across diesel, gasoline, jet fuel, naphtha. We provide the ability to trade all of these contracts and protect yourself. But also, again, if you have a speculative view, perhaps you really believe that jet fuel is going to become especially compressed in terms of supply, and we could see prices getting even higher from where they are now at $100 per barrel. They've risen $40 per barrel, but of course there can be more room for upside. This is the place to come to express that view with the niche contracts and the ability to trade key differentials to express your view beyond what you can just do with a proxy like Brent futures.